Ladies and gentlemen, I have to be honest. We've been lied to.
But wherein?
Have we been lied? The best liars lie with the truth. And they have lied about the moon mission of Bitcoin. But let's talk specifics. We will use a chart by Dave the Wave. Now, to be clear, this man is not a liar. Just going to use a chart to illustrate the point. We are looking at the history of Bitcoin since inception, which can be divided into 4 waves. 1, 2, 3. And we are currently in the 4th. Here they are plotted together, although more cleanly. From Homo sapien, we have this. Red 1, blue 2, green 3, purple current. Take a long, hard look at this and slap yourself if you think Bitcoin will break 20K this year. Or if you think the next peak will be in 2021. But let's be real for a moment. This absolutely sucks. And again, I'm not trying to look a gift horse in the mouth. And editor, if you can actually put a horse there instead of a donkey as last time. Very good. It's not like Bitcoin has been a bad investment by any stretch. I'll take it over fiat any day. How'd you get in my house? But it's no Moon Lambo investment. Not yet, at least. Many Bitcoin theorists who use previous cycle data as any justification of what might happen in this cycle, and there are quite a few, are being let down in a major way. This is even accounting for the diminishing returns we are seeing in each cycle due to the growing market cap of Bitcoin. I hate to pick on the stock to flow model again, but here we go. It's not like we're majorly off course. We are projected to be at around 14,000 by the start of next month, so we'll see. But straight up liars then? Yes. There is, however, some glimmer of hope. So whip out your gas tanks, 'cause here it comes. There is another thing which this chart makes very clear. The cycles take longer each time they occur, which makes sense. The larger the economic mass, the longer it should take to move it up that hill. So let's be patient and keep our Tesla orders bookmarked for the day we can finally submit the order. However, and I feel I do need to discuss this with you, I would be remiss if not. Something that, when you realize it, changes everything. You remember when I said I was going to trade Bitcoin? Well, I'm not going to do that anymore. There isn't really any need, not since DeFi has automated market making for us. And this could actually be one of the reasons that Bitcoin has paused in its progress upward to the point now where we're behind stock to flow predictions. Shock horror. And why dominance has been so hard fought. For example, yearn.finance. I spell it wrong. Don't get fished. Okay. Heading over to vaults on the right. Connect your wallet to MetaMask if it is required. This pool has a 94.72% ROI, I presume, per year. Now, I know what you're thinking. Man, oh man, I could go for a hot dog right about now. You can't buy me hot dog, man. But also, this sounds a bit dodgy. How is that possible? Well, it's dependent on several things. Number 1. Smart contracts without bugs, and the continued favorable prices of the CRV token. This particular strategy came out a few days ago at over 100% and is now down to 94.7. The more people get involved, the more it will go down. I am incentivized not to share this with you, so there you go. You're welcome. Now, how do you do it and how does it work? First, you head over to curve.finance. Curve.fi.
What is that?
Now, I know the UI is pure cancer, and that's very intentional. In the same way the founder of Yearn Finance said his token was valueless, which is anything but true, the insiders do not want the masses flooding the space until they can first profit from it and then introduce it to the masses. But anyway, get over the repulsion and confusion. Now is not the time for a blonde moment. No offense.
Ow! At the top of the finger is, okay?
Are you sure?
Right there, quick.
Let me call somebody.
Very basically, head over here to the Y pool. We deposit our assets. Now, it can be Ethereum or any other pretty much Ethereum-based asset converted into the 4 most popular stablecoins being DAI, USDC, Tether, and TUSD. They are then deposited and used for market making. You earn your portion of these trading fees of the people trading between these tokens. Why are people trading so much between stablecoins? Maybe arbitrage. I actually don't know, but what I do know is that it's profitable to liquidity provide for those that are. So you will deposit these coins, and in return, you will get something in your MetaMask wallet that looks like this: Y DAI, Y USDC, Y USDT, and Y TUSD. You then lock it up in here. I don't have any at the moment. I'm actually doing this with my parents-in-law's money, so they'd be okay if they lost it all, but I am practicing what I preach. This would then farm and sell CRV tokens in your behalf, currently valued at a 94.7% ROI. Could continue to fall, but I think maybe over 70% should be sustainable depending on what the CRV token does. So the question arises, if people are just farming and selling their CRV, why would anyone buy this?
Sorry, I just think I'm too stupid to understand this.
To be clear, you should not, unless you know exactly what you're going to do with it, which will be locking it up in the curve locker for a certain amount of time to apply a boost to your tokens. Although this is a different farming strategy from the one I just mentioned on Yearn Finance, but this one can be done from Bitcoin. It is a lot more complicated to do it this way, but it's still, with a little bit of research, you can do it. For the more advanced of you out there, I will leave a thread down below from Crypto Yield Info on Twitter on how to generate a, let's say, 20k annual income based on 1 BTC variable on a few things, as he mentions. Now, I've purposely given you a very brief overview of one of the simpler farming methods. That's very intentional. If you do want to learn a little bit more, you actually want to see it being done, I'll leave a video link down below from DeFi Dad, who does a 30-minute explainer video on it. But of course, 94% is pretty basic in DeFi, actually.
3 or 4 times, maybe.
I'm gonna pump those numbers up. Those are rookie numbers in this racket.
But I'm not discussing yams or pasta or based here on this channel because the risks are just so much higher. And this is coming from someone who farmed yams, and actually anyone who tells you it's dead doesn't know the full story at all. But anyway, those types of things are a lot more dangerous and require a lot more babysitting, so it's not really advisable. Of course, if you are wanting to farm some yield and do it even simpler than what I've discussed, Crypto.com actually has a very good service for this. So, top of the list, Crypto.com coin 18% per annum. Pretty good. Bitcoin 6.5%, Ethereum 5.5%. Stable coins are very good. Tether 12%, USD 12%, DAI. There are more. So this is definitely the simplest method, plus free Netflix and Spotify. And a $50 sign-up bonus if you use the link down below. But that's been it from me. Let me know what you guys think. Let me know about your farms. Maybe I do want to know about them. Let me know what you think about these ones, though. For sure, I'm interested. And I will see you guys on the next one.
I can't see. I can't see anything.
Have you tried opening your eyes?